Welcome to the Big Picture Retirement Show, where you'll learn what it really takes to have a successful retirement. With over 20 years of experience, your host, Rick Rivera of Safeguard Investment Advisory Group, has seen it all and is here to help you achieve your retirement dreams. This is the Big Picture Retirement Show.
Well, hello. Once again, you're listening to the Big Picture Retirement Show. I'm your host, Rick Rivera. I want to thank everybody for tuning in today. And once again, as we always do, what we'd like to cover on the show is try to give you information that you can use that will enhance your retirement planning. The tools and strategies we're going to give you are going to be things that you can actually implement right away that will be able to enhance maybe your taxes, maybe maxing out your Social Security and your pension benefits so you can eke out every penny out of those things. Maybe how to maximize your 401ks, how to pass on maybe assets more efficiently and tax efficiently to heirs and loved ones, or maybe you have a special needs scenario. We talk about different strategies regarding investments, and more importantly than trying to pick the right investment, what we try to do is show you how you can maximize your returns, but minimize the amount of risk that you're taking on those things. We don't want to be taking any unnecessary risk. We talk about strategies on how to minimize fees on your investments and things of that nature. So, and the list goes on and on and on. We talk about long-term care plan, we talk about trust and wills, power of attorneys, all those different things that, it's real easy for someone to want to try to chase return in the market. But, those are things that, nobody's in control of. What we want to do is give you tools and strategies that talk about other things aside from just trying to chase return in the market that tie in to the overall performance of your investments and your retirement planning. Because at the end of the day, let's face it, you could have the best investment in the world making you, 10% return every day, but what good is that if, God forbid, you have a medical emergency and now your family can't access your accounts to pay your bills or handle your financial affairs? Or now the assets are stuck in probate and now the attorneys in courts are getting all that money. What good is, you could have the best investment in the world and God forbid, you have a long-term care situation. Now the nursing homes are getting all the money. So again, like I said, you get a great return on your investment, but you're not actually eking out your Social Security and your pensions and eking out as much as you can out of those efficiently. So whatever extra return you're making on your investments, you're losing on the other side. Maybe you're overpaying in taxes, overpaying in fees. So again, I don't want to sound like a broken record, but again, this is something that by tuning into the show each and every week, you're going to learn more and more. Now, if you have questions about any of the topics that we talk about on the show, please don't hesitate to give us a call. That's what we're here for. Also, you may have questions about things that maybe I didn't get a chance to talk about on the show. And maybe you have a question about your own personal situation because maybe you work for Kaiser. Maybe you work for the phone company or the gas company or electric company. And I know you guys have special, unique situations and you have pensions that, unfortunately many other people don't have. I mean, fortunately you have it, but, a lot of people don't have. So you have opportunities that you want to learn how to maximize. Well, give us a call. We can help you and help you strategize. Again, whether you're already retired or maybe you're close to retirement. And how you do that, just give us a call toll free, 800-700-1980. You can also reach us on the web at safeguardinvestment.com. Again, our website address is safeguardinvestment.com. And again, our toll free number, 800-700-1980. And feel free to give us a call if you have any questions about the topics again on the show, or maybe something that I didn't get a chance to talk about, but you have a question about your own personal situation, be happy to answer those questions for you. Now, last week, we had several people calling in asking about Roth conversions. Does it make sense for them to do? Is it something that they should consider? So what I'm going to do today is I'm going to talk about Roth conversions, and before I do that, I kind of want to explain exactly what a Roth is. And there's a few different things that we need to understand definition-wise when it comes to Roths. The difference between a Roth contribution and also a Roth conversion, two different things. So that way we make sure we're all talking from the same playing field here. Basically, the difference between your traditional IRA, or let's just say a regular 401k plan that you may have, is that any money that you put in, obviously you get a tax deduction on, and down the road, when you pull those monies out for retirement purposes, you pay taxes on the money at that time. So, quick example, let's say you're making $100,000 a year in income, you put $10,000 into your IRA or your 401k traditional accounts. Well, instead of reporting $100,000 on your return that year, you only have to report $90,000, which saves you a little bit of money in taxes, which is, a good thing. Now, once you retire, let's say you retire at 65 or whatever age you plan on retiring, and you start drawing that money out, well, that money that you pull out, you'll have to report on your tax return. So let's say you're using $10,000 a year out of your IRA or 401k to offset your living expenses. You have to report it on your return and pay the taxes on that money at that time. So what's happening is you're getting a tax deduction up front, but then on the back end, you got to pay the taxes. So the thought process behind that is, main reason for most people to do that is they figure, hey, listen, while I'm working, I'm going to be in a higher tax bracket. And when I retire, I'll be in a lower tax bracket, so I might as well pay the taxes then. Now, we're finding out that many of them are actually in a higher tax bracket when they're retired than when they were working. So now you might be asking yourself the question, well, Rick, well, how's it even possible? Aren't you making more money when you're working than when you're retired? Well, not necessarily. But here's a couple of other things that play into this. So let me give you an example. Many times, and especially those of you that are, that have great pensions, maybe you work for the county or the state. Some of you, have FERS, or maybe you have CalPERS or CalSTRS, and, many of you have great pensions. So what happens is during the early years while you're working and you're making a great income, some of you have, the mortgage interest you can write off. You had the kids that you could write off. You had deductions. Some of you maybe had rentals or property that you were depreciating. And after all your, itemized deductions and everything else, you're actually in a fairly, lower tax bracket. When you retired, you find out that home's paid off, you got no bills. A lot of those deductions that you had earlier on, you no longer have. Many people, they get rid of the rentals and they just don't want to deal with them anymore when they retire. So a lot of that depreciation, things they were writing off earlier on, they're no longer there. So now when they retire and maybe they have a nice pension coming in, they're making, and especially if you're a teacher, you know what I'm talking about. Many people that are teachers or, again, work for the county and things like that, they put in some good time into those careers. So their pension is paying 80%, 90%, sometimes 100% of their salary and when they're working. But now they don't have the write-offs like they used to. So in retirement, they're actually in a higher tax bracket than when they were working. So what we do as an advisory firm is we analyze people, individuals, retirees' tax situation, so we can determine, hey, when you retire, where are you most likely going to be? Because then now here's the other thing I want to explain. Let's talk about the Roth, how that comes into play. For those of you that are not familiar with it, a Roth works just the opposite of what an IRA and a 401k does, as far as, you're putting money in, the IRA and 401k get the tax deduction now. With a Roth, you don't get the tax deduction now. So that example I gave you earlier where somebody made $100,000 and they put $10,000 in the IRA, they only had to report $90,000. In this particular case, if I put that same person making $100,000, if they put $10,000 into the Roth, they don't get a tax deduction now. They still have to report $100,000 on their return, pay tax on the $100,000. Now the advantage of that is that now that $10,000 they put into Roth, they already paid the tax on it, so that's going to be tax free to them. But any interest and any accumulation that happens to that account is also going to be tax free as well. So when they retire, that money, as they start pulling it out, they can pull it out tax free. So now you understand the difference between the two. So what I want to do is I want to go into some further explanation and discuss some of the points that you need to look at to determine if it makes sense for you to start contributing to a Roth now, as opposed to doing a conversion. There's some key things that you need to look at. So what we're going to do is we're going to take a quick break. When we come back, I'm going to cover some of the key things you need to look at to determine if it makes sense for you to contribute to a Roth now or do a conversion. I'll be right back.
You're listening to the Big Picture Retirement Show with Rick Rivera. For more information about Rick and the Safeguard Investment Advisory Group team, go to safeguardinvestment.com. While you're there, you can also download educational retirement guides and sign up for an upcoming seminar. That's safeguardinvestment.com. Now, back to the podcast.
And we're back, and once again, you're listening to the Big Picture Retirement Show. I was just talking about, Roths and Roth conversions, and I want to pick up where we left off, and I want to talk about some of the key things that you need to take a look at and consider. Now, these are just some of the things. There's going to be some other things outside of what I'm going to discuss where, again, it's always good to sit down with an investment advisor that can guide you through all of this. But if you have questions about anything I'm discussing with you today, maybe you have questions on your own personal situation, on whether or not you should do a Roth conversion. Maybe you have a question on, hey, Rick, how can I maximize the pensions? I work for Kaiser, I work for the Edison, or I work for AT&T, and I want to know how I can maximize my pension. I'm already retired, or I'm about to retire. Or maybe you work for the state or the federal government, and or maybe you're just saying, hey, I'm going to be collecting Social Security, and how can I, milk that for every, penny that it's worth? So if you have questions about these things, just give me a call about your situation, toll free, 800-700-1980. Again, the toll free number is 800-700-1980. Now, let's pick up where I was leaving off. So what I was saying was I explained the difference between an IRA or 401k and Roth. Should you make the conversion choice? So step number one is, hey, one of the things we got to look at is, hey, where is your tax bracket now? Where is your tax bracket going to be down the road when you actually do retire? So a mock tax return should be done for you. This is something that we do for our own clients. If it's something that you want done for yourself and want it to be looked at, we can run one for you as well. There's no cost or obligation. Again, just give us a call toll free, 800-700-1980. But when the mock tax return is being looked at, another thing that needs to be taken into consideration, and here's something that people overlook. If you're going to be receiving Social Security, and we want to milk out every penny out of Social Security, what most people don't realize is Social Security is not taxed like a regular pension is taxed. So what happens is there's a formula that is used to determine how much of your Social Security is going to be subject to tax when you retire. So the IRS is going to calculate any income sources that you have coming in, whether it's wages, whether it's interest off investments, whether it's rental income, a variety of different sources. And one of the sources that they look at is any money you're extracting from your IRA, your 401k, your 457s, your TSPs, because they're going to look at that income, and then that income is actually going to be used against you so they can tax more and more of your Social Security, which means you'll be adding more money to the return, which is pushing you into a higher tax bracket. So the advantage of a Roth is that any money that you extract out of it, because it is tax-free, none of that money is used against you in order to push your Social Security into a higher tax bracket. Now, some of you might say, well, Rick, why not go into tax-free bonds? Well, any interest that you're getting on the tax-free bonds actually is used against you. So now you're defeating the purpose in order to increase the amount of taxation on your Social Security. But if you have a Roth IRA, none of that is being used to push your Social Security into a higher tax bracket, which is adding more money to the return. So the point that I'm trying to make is that there's, again, some different aspects that have to be calculated for you. Again, that's why we do mock tax returns for our own clients to determine, does it make sense for you to do a Roth now, do a conversion now? And the difference between a contribution and a conversion is this. With a contribution, you have to have earned income. Because sometimes I'll have retirees say, hey, Rick, can I contribute to a Roth? And if you're already retired, you have to have earned income, which means W-2 income, in order to contribute. However, whether you're retired or not, say you're retired and you're getting pension, Social Security, rental income, things like that, that's not considered earned income. But if you have an IRA or 401k, you can certainly do what's called a conversion. Can't do a contribution, but certainly you can do a conversion. And there's formulas that we use to help us determine if you are going to do a conversion, what is the appropriate amount you should be converting each and every year. So that way you pay your taxes on that conversion wholesale instead of retail. And then also it's structured in a way so that way, again, you can minimize the amount of taxes on your Social Security. So now you can maximize the amount of Social Security that you're going to be receiving. And then, of course, at the end of the day, the other advantage of the Roth as opposed to an IRA or 401k or things of that nature is, let's say you're retired at age 72 with your traditional IRAs, whether you need the money or not, you are forced to take a distribution out of it, and Uncle Sam tells you exactly how much you have to pull out. And that number is added to your return, and that number that they force you to pull out is now used to tax you on your Social Security as well. So now it acts like a domino effect. And each and every year, they require you to pull out a little bit more, a little bit more, a little bit more, which now adds more money to the return, pushes you into another marginal tax bracket, cause your Social Security to be taxed higher and higher. So folks, this is why we call our radio show the Big Picture Retirement Show. Because again, when it comes to your retirement planning, just think, I'm just giving you one idea today. So many advisors out there are so busy chasing return in the market over something that they literally have no control over. You know, they can give you their best educated guess as to, you know, how the stock market's going to perform and what the direction the economy's going and all the rest of it. But at the end of the day, many of these individuals are so busy chasing return that they're actually reaching over the dollars to pick up the pennies. Because folks, if we can show you how to save 10 or 15% in taxes, or how to save 10 or 15%, taxes on your Social Security, how easy is it to make that same 10 or 15% in the market? By just controlling the things that we can actually control. And this is why I was saying earlier in the program, you could have the best investment in the world, but what good is it if you're not looking at these things from that big picture standpoint? And God forbid, you're making a great rate of return on your investments, but you're losing it all on the back end because now your Social Security is being taxed at the 85% level. You're pushed into a whole nother marginal tax bracket. Or maybe your estate planning documents aren't prepared properly and you have a medical emergency and now your family can't make medical decisions for you. What good is that investment going to do you? Or maybe they can't pay your financial bills, handle your everyday expenses because you're in the hospital and they don't have the power of attorneys to do that. Or you got a great investment that's working for you, but unfortunately, your long-term care planning isn't in place. So folks, if you have questions about any of the topics that I'm talking about today, the Roth conversions, how to maximize your pensions, how to maximize your Social Security, maybe minimize the fees on your investments, what's the best way to strategize in today's, environment, retirement-wise, give us a call, toll-free, 800-700-1980. Again, that toll-free number is 800-700-1980. Now, you can also reach us on the web at safeguardinvestment.com, and we're doing webinars each and every week. So if you care to tune in to our webinars, there's no cost or obligation. As a matter of fact, you can tune into our webinars right from the comfort of your own home on your laptop or your desktop computer. And just give us a call or reach out to us on the website, and we can send you the dates, the times, and also a link that you can click on to follow us and join us on the webinar because there's a lot of good information on there. So again, how you do that is just give us a call, toll free, 800-700-1980. So if you're one of these individuals that have been thinking, hey, you know what, I've been procrastinating on this for a while. I've been listening to the show for a while, and I just haven't had a chance to pull the trigger on it. Maybe I actually do want to sit down with an advisor that can, look at my entire situation and just give me a second opinion. Maybe you are working with somebody right now, but you just want a second opinion, have a second pair of eyes looking at your overall scenario just to make sure that nothing is being missed. If you call the show right now, we'll be happy to do the analysis for you. No cost, no obligation. Just give us a call, toll free, 800-700-1980. But you got to call the show now. Now, what I'm going to do is next week, when I do the show, I'm going to be talking about a topic that you guys want me to talk about. So if you can, do me a big favor. Call the show right now, 800-700-1980, and let me know what topic is most important to you or what you would like me to cover. If you call the show right now, today, and the topic that you suggest to us, if I use it on next week's show, I'm going to send you a $25 gift certificate to Starbucks. So again, give us a call, toll free, 800-700-1980. We want your input. I want to be able to talk about things that are important to you rather than a bunch of things you could care less about. So if you call the show today and I use your topic that you suggested next week's show, so you want to tune in next week's show, if I use your specific topic, I'm going to send you a $25 gift certificate to Starbucks. So again, that's just to show us your appreciation for calling in and giving us your input. Now, once again, folks, as time goes by so quickly, and this brings me close to the end of the show, I want to thank all of you for listening. And one last time, if you have any questions about any of these topics, or maybe you just want a second opinion about your own personal situation, give us a call, toll free, 800-700-1980. Also, give the call a show right now and let us know what topics you'd like for me to cover next week. And if I use the topic that you specifically called in about, we'll go ahead and send you a $25 gift certificate for Starbucks just as a thank you. Thank you so much for tuning in. Look forward to talking to you all next week. Have a great day and have a great weekend.
Firm offers insurance services. Safeguard Investment Advisory Group, LLC is a registered investment advisory firm. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Safeguard Investment Advisory Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Safeguard Investment Advisory Group, LLC. This radio show is a paid placement.